Welcome! Thanks for joining this discussion brought to you by the experts at ProTax Accountant. We're going to be talking about a really crucial change in UK pensions. Believe it or not, a recent rule change could mean you're actually owed thousands in tax-free cash. And it all comes down to a little-known document called a Transitional Tax-Free Amount Certificate. So, let's dive right in. Back in 2024, the pension rules got a massive shakeup. And here's the kicker. It could mean you're entitled to more tax-free cash than you realize. Seriously, if you've ever taken money out of your pension in the past, you're going to want to listen very, very carefully. All right, here's how we're going to break it all down. First, we'll look at the big picture changes. Then, we'll get into the specifics of this certificate, what it is, and more importantly, if it's for you. We'll walk you through how to get one, and then show you some pretty eye-opening examples of the financial impact. Finally, we'll cover your next steps. Okay. First things first, let's talk about this great pension shakeup. To really get why this new certificate is so important, we first have to understand the kind of hidden trap that these new rules accidentally created for some people. So the huge headline news is that the lifetime allowance, you might know it as the LTA, is gone. It's been abolished. For years, that was the ceiling on how much you could save into your pension without facing extra tax charges. Well, as of April 6, 2024, that cap is history. But its removal created a whole new, unexpected complication. And this right here perfectly illustrates the shift. See, under the old system, HMRC cared about the total value of your pension pot when you took benefits. But now, under the new system, they only care about one thing, the total tax-free amount you take out. This change, from looking at the whole pot to just the tax-free slice, well, that's the absolute key to understanding everything that follows. So, to deal with this shift from the old rules to the new, the government came up with a solution. It's called the Transitional Tax-Free Amount Certificate, or TTFAC for short. Yeah, it's a mouthful, I know, but trust me, it's a really important document. So what on earth is it? Well, the new system makes a default assumption. It assumes that 25% of any pension money you've already taken was tax-free cash. But what if you took less than that? The TTFAC is basically your way of raising your hand and saying, hold on, that assumption is wrong for me. It's official proof that corrects the record and protects your future tax-free entitlement. And this really isn't just boring paperwork. As the team at ProTax Accountant puts it, for the right person, this certificate can be a genuine lifeline. It's a tool to make sure you get to keep every penny of the tax-free benefits you've worked so hard to build up. And now we get to the million-dollar question. Does this actually apply to you? Stay with me here, because this is where a lot of people could miss out on a big opportunity, and the answer might just surprise you. You see, the problem is that standard one-size-fits-all calculation. It just assumes you always took 25% tax-free. But life isn't always that neat, is it? If any of the situations you see here sound familiar, that assumption is probably wrong. For instance, maybe you had an older final salary scheme where the tax-free lump sum was less than 25%. Or maybe you moved a pension overseas. In those cases, the standard calculation is actually working against you. A certificate fixes that. Right, here's the most important question of all. Did you take any money from your pension between April 2006 and April 2024? If the answer is yes, you absolutely need to be paying attention. If the answer is no, then you can't apply for a certificate and this won't apply to you. Now, this is where it gets really urgent. Here's a massive pro tip for you. This is a one-time opportunity. The window to apply for this certificate slams shut the moment you take your first pension payment under the new rules. The second you take that next bit of cash, your chance is gone. Forever. So timing is absolutely everything. Okay, let's say you think you might need one, and you totally get the urgency. So what's the next step? Let's walk through the actual process of getting your hands on one of these certificates. It's basically a four-stage process. First, you assess your own situation. Then, and this is the hard part, the ball is in your court to gather what HMRC calls complete evidence. Once you have that, you send it to your pension provider, and they have up to 3 months to look at it and either issue the certificate or tell you why they can't. So, what counts as complete evidence? Well, the rules are a bit fuzzy, but your pension company is going to want official proof. They need to see how much of your old lifetime allowance you used up, and crucially, how much tax-free cash you actually received. We're talking old pension statements, letters from providers, maybe even bank statements. The key thing to remember is that the responsibility to dig up this proof is entirely on you. And you absolutely have to get this right. It's so important to be accurate because there's a pretty hefty penalty. up to £3,000 for anyone who provides false or misleading information on their application. So dot your I's and cross your T's.
Okay, now for the really exciting bit. Why would you go through all this trouble? Because the financial impact can be massive. Let's look at 3 real-world case studies to see how a certificate can save you or your family thousands.
First up, let's meet Rakesh. He took benefits from his defined benefit scheme. Now, the system assumes he took over £120,000 tax-free, but the reality is he only took £105,000. Without a certificate, his future tax-free allowance gets unfairly docked. With the certificate, the record is corrected, and his remaining entitlement gets a nice boost.
Now let's look at Anita. She had pension protection, which gave her a higher allowance. The standard calculation assumes she took £337,500 tax-free, but she actually only took £322,000. By getting a TTFAC, she unlocks an extra £15,500 of tax-free cash she would have completely lost otherwise. That's not small change.
In this example, this is probably the most powerful one. Martin has already used up 100% of his old lifetime allowance. So, without a TTFAC, any lump sum paid to his family when he passes away would be fully taxed. But by getting a certificate that proves his actual tax-free cash history, his tax-free death benefit allowance is restored to over £1 million. This could literally save his beneficiaries a life-changing amount of tax.
So, after seeing that potential impact, let's just quickly pull it all together. What are the key things you need to remember, and what should you do next?
All right, here are the absolute essentials. This certificate is your tool to fix an unfair calculation. The deadline is non-negotiable. You have to apply it before you touch your pension again. The burden of proof is on you, but the reward, especially for your family down the line, can be huge. If you're even a little bit unsure, it's time to dig out those old pension statements or get some professional advice. And we'll leave you with this final thought. With all these rules constantly changing, could taking a little bit of time to look back through your own pension history be one of the most valuable financial moves you make this year? Thank you for joining this discussion from Pro Tax Accountant.